Listen to this episode if you are struggling with overall profitability in your product-based business or startup. Hello, today we're talking about one of my favorite topics. I am a big numbers gal. We're going to be talking about profitability, what that really is, and how can you overall improve it. If you are struggling with profitability, you know the struggles that come along with it. It's hard to be able to afford more product. It's hard to be able to afford big launches. It's hard to be able to afford help and labor. It's hard to be able to afford a lot of things if we can't get our profitability under wraps. Like if we can't understand how to make profit, your business is the strongest asset, is the number one thing that we need. It is the most important metric to be able to figure out how can we actually make this business succeed. Cash flow issues cause a lot of stress. They cause a lot of issues in the scaling process. And so today I really want to talk about how can we increase that profitability in your product-based business, some common mistakes that I see, some client stories, and all of that. If you didn't know, I am the daughter of a proud financial advisor. And so from a very young age, I have been talking about numbers. Your girl's brain kind of works in numbers. I am a little bit of a nerd when it comes to numbers and spreadsheets and analyzing my clients' metrics, like all of that. It's so fun. I literally onboarded a client this week. They sent me an email with full of just a bunch of spreadsheets, a bunch of their numbers. And I was like a giddy child in a candy store because I just wanted to get in there and make some spreadsheets with it. It's pretty fun. So we're going to really dive in to this numbers game today. Hello. I just want to say, if you are new here, I want to give you a nice warm welcome. I am Madison Page. I am the host of the Small Business Growth Podcast. I am a business growth specialist. I help product-based business owners, startups, designers, makers grow their business through social media and building a community online. I love working with e-com businesses, startups, all of that. We're all about having a balance-based approach to business here. And when we talk about profitability is one of the major reasons that people burn out. Why that is because you're working so hard in order to make more money because your profitability is low. You're feeling burnt out and then you feel like you're working so dang hard and your profitability isn't changing. But a lot of times profitability is a behind the scenes issue. A lot of times profitability isn't always a sales issue. Profitability is actually an issue of how the actual business is run. It's most of the time an operational issue. It's a lot of times what we don't actually think it's going to be. And I'm going to really dive in to that. So one thing that I just want to get very clear, the difference between profit versus revenue. Revenue is the amount of money you have coming in. So the amount of sales that you make, let's say it's $1 million, your profitability, your profit is how much money you make at the end of the day minus your expenses. So your revenue minus all of your expenses is your overall profit. And so there's a lot of different metrics here that people look at. We look at profit margin, we look at cost of goods sold, we look at revenue, we look at a lot of different net profit. And so what I'm going to be talking about today really is your overall net profit, your overall profit at the end of the day, what we're talking about. A problem that I see really often is that people look at their profit margin based on what your actual costs of your goods are, based on the cost of the supplies. We are talking about overall profit, not revenue today. Your revenue can be $1 million, but if your profit is only $50,000 off of that $1 million, then it is going to feel like kind of at the end of the day, what's the point? We did all of these things, this business is growing. However, our profit margin is so incredibly low. How can we really go about increasing that from there? Now, I'm not going to be able to speak too much about what is average, what is normal, what we are aiming for, because it is very different based on your industry. I hope I didn't lose you already talking about metrics and a lot of these different things. I'm going to really simplify this throughout this whole podcast. I'm really not going to talk too much on the nitty-gritty of what these metrics mean. Just know that we are talking about really at the end of the day, net profit. Now, net profit is minus all of your operating expenses, your shipping costs, your labor, your cost of goods, everything. When you are doing your overall taxes, what is kind of that bottom line number? We're talking what is that number that you spent on everything and how much did you actually come away with at the end of the year to this year? Now, it's going to be hard for me to give you an overall profit margin that you're really aiming for because it is very different based on your industry, but I really want you to look at it as at least a 10 to 20% overall profit margin is like, we would rather you be closer to that 20%, if not higher. Now, again, based on if you're a restaurant or if you are a product-based business, if you're a maker, all of those things play a really major role in this. But at the end of the day, what we are really looking for is understanding that you have enough money coming in to be able to run your business as well as invest back into your business. So the higher that profit margin number at the end of the day, the better your business, the more longevity that your business really has. Think about when you watch a Shark Tank episode, what are some of the most important, the main questions that they ask? They are asking for, how much have you made? What is your cost to run the business? How much does it cost for you to make this product? And like, how much money are you taking away every single time that they sell? So they are looking for that overall profitability. You might be asking yourself right now, Maddie, honestly, my numbers are none of my business. I have seriously no idea if my business is profitable or not. You might be like, I give my numbers to my husband or my accountant or my friend or whatever that might be, and they handle the numbers for me. You might also just say, you know what, my accountant takes care of it. Money comes in, money goes out. I have no idea what's actually happening there. And that is a really scary place to be. I just want to make that known. I have had plenty of clients come to me where we look at their numbers and I literally have to tell them that at the end of the day, they're making like pennies on every sale. And that is something that is really scary. And we have to be able to have a really solid, at least baseline knowledge of where our profitability is at in 2025. If you are in this situation right now where you have really no idea how overall profitable your numbers are, and this is a great time to have this conversation because it is tax season. So we are probably doing some income statements, some P&Ls, really looking at some different reports, just like kind of poking around. It's something that I really want you to get in the habit of doing at least quarterly, is just looking at the money coming in, the money going out, all of that. You might be making really good money. You might be making really good sales. You figured it out. You understand how to do marketing and sales for your business, but you're looking at your numbers right now from last year and you're like, oh my gosh, is this even worth it to be making that amount of money? We really want to make some major expansion, but it just doesn't feel like we have the sales in order to, like, it doesn't feel like we have the profit. We don't have the cash flow in order to make those big jumps, either whether it's hiring or trying to have more inventory or expanding into a brick and mortar or whatever that might be. You're saying, all right, I have these big goals, Maddie, but I cannot afford these big goals. And that is another thing that we can really look at when it comes to profitability, because if you have the sales coming in, if you're making $200,000, $500,000, $1 million, whatever, and you have the sales coming in, we need to set up our business to have the profitability to allow for some expansion, and to allow for us to invest back in the business and take really bold action. Because at the end of the day, if we don't have profits, we are not going to be able to continue to run the business for too long. Again, maybe you're feeling like, money comes in, money goes out. I have no idea what's going on. You might be doing your taxes right now and kind of freaking out, realizing that you made a very small percentage of profit last year. And you're like, all right, like, how can I actually fix this moving forward? And you really don't know if you have a plan to move forward going from there. And you might be saying, Maddie, and literally these numbers are none of my business. And I have no idea what this even is. I know for a lot of creative people, the numbers are just not a part of your business. That is one of your strong suits, and that is A-okay. Not everybody is going to be built for math and science. The art side of my business is sometimes none of my business. I'm like, you know what? I have the strategy. I have the words. I can do that. Like, we all are built very different. We all have strengths and weaknesses in other areas. You might be looking at me saying, Maddie, spreadsheets sound like my absolute worst nightmare. We're all built different. That's what makes the world go round. However, if you are in that boat, we need to ensure that you have somebody that is taking very good care of your numbers, because business is a numbers game. We need to understand our numbers. We need to understand what our business is really doing at the end of the day. What are these bottom lines? What are these numbers? So we need to have somebody. You need to have a really good accountant. You need to have somebody that is consistently looking after your numbers. And an accountant, not all accountants are created equal. If you need a business accountant, please reach out. I have a really great kind of arsenal of people that I can refer you to, but not all accountants are created equal. Some are going to be very hands-on. hands-off. Some are going to be very hands-on. And it really depends on what you're looking for, all of that. But you do need to have somebody that really understands your numbers on your team. A lot of times it's like some people's first major hire in their business is having somebody to just take care of their overall numbers. So no matter which one of those scenarios you're in right now, whether you are making sales and you just don't have the profit that you're looking for, or you really don't know even where your profitability stands, you might be looking at your taxes from this last year saying, all right, like this would be really lovely if this number was a little higher. That doesn't feel high enough for the amount of work that I put in. We really need to, we're going to really break down some of these common mistakes and see how we can actually go about increasing your profitability. So first things first is the major mistake is that we're going to talk about. We're going to talk about some of the biggest red flags that I see in the risk for the longevity of your business. Now, I don't want this episode to be like a doomsday episode. I don't want you to listen to this and be like, holy cow, I have so much work to do. I know none of these things. Like my business is literally failing. I just want you to really listen to it and think of it as a way to not judge yourself, but actually just learn. I'm going to really try to come at it with a like fear mongering perspective, because I think there's a lot of fear mongering out there in podcasts and marketing and business in general, where you leave and you feel like, oh my gosh, my business is actually like, let's just, let me just throw in the towel now and we can kind of go from there. Let's start fresh. Maybe I'll just go back to a 9 to 5. That is not where I want you to be. I want you to feel really solid in what it is that we're talking about. And even if you just take away one major thing from this, or that you can really understand what your costs of goods sold are a little bit better, or know, hey, that is something that I'm doing. That's an area that I can look at. It's a great time of year to really be talking about profitability, because our taxes are being done. We're starting to look at we looked at our 1099s. Who did we pay? What did we do? All of these things. Your accountant is doing some work, whatever that might be. And so I want to talk about some major mistakes that I see. But again, I'm going to take this from an educational approach. I don't want to take it from a fear-mongering approach by any kind. But I do want to say that your profitability is really important for longevity and to be able to put money back into your business. So first things first is that you have a major mistake is that you have little to no understanding of your cost of goods sold, and you don't have an overall ritual to go back and look at the price increases based on what your actual price is for, like the cost is for your product. A major piece of this in these last year or two, it's been very common for many suppliers and just costs in general to be increasing like across the board. And so one thing that I've seen a lot of people do is that they haven't actually adjusted the price of their products, the price that they are actually selling their products for, to reflect the actual cost of goods sold that have increased as well. Another major thing that I've seen is that you never really take the time you might do it once, you like figure out what your profit margin is for your products once, but you really don't know. You don't have if I ask you, what's your profit margin on some of these, and we don't have at least a range of an average profit margin for every single product. It's something that we really need to be able to know in order to price your products, in order to sell them, in order to have bundles, in order to have sales, in order to have discounts, because we need to know what that metric is. So a lot of times people are running almost too many sales. Another major mistake, you're running too many sales that you don't actually have factored in to your overall profit, to your overall cost of your product. So for example, if you're selling a product that's $30 and you are making $10 on every sale, just for easy numbers, that means your costs of goods are $20. You have $20 for your cost of goods sold. You have $10 of a profit margin in there, and you run a 30% off sale. That means that everybody off of that $30 item is getting $9 off. So you just cut your profit margin to $1 per item. And you might not even know that you did that. You're like, oh, well, doing a 30% off, but we just did 30% off. That actually cuts your entire profit margin off of that product. So without knowing your cost of goods sold, without knowing your overall profit margins, it's really hard to actually operate any sales, any discounts, or just operate your business in general to be able to make solid business decisions, to know if you are making an overall profit. Another major piece of this, a tip for you, is don't be afraid to shop suppliers. A lot of suppliers have different costs. Maybe that means that you have to get your products from multiple different suppliers to be able to find the least expensive option there. Also, don't be afraid to shop in bulk. Don't be afraid to buy a little bit more, especially as your business grows. If you know you're making 100 orders a month, 50 orders a month, 500 orders a month, whatever, 5,000 orders a month, we can start ordering in larger quantities as long as you don't have a shelf life on those ingredients or on those items, on those supplies. You can start ordering in larger quantities to actually cut the costs at the end of the day. Now, again, if you're struggling with profitability, that might be something that is a scary jump because you might not actually have that wiggle room to increase your expenses now because you don't actually have that money coming in. So it's something that we might need to do incrementally and after making some of these other changes. But shop around suppliers, try to buy in bulk, and really have a solid understanding of what your profit margin is so you can understand what sales you actually can do. Another thing is really a pricing mistake. I think a lot of people try to make their business as affordable as possible, but most of the time in business, affordability is not actually the goal for people. Yes, that can be a major differentiator in your brand. That might be something that you are differentiating on, is like, this is an affordable option compared to everything else in the industry. I have a whole episode talking about affordability not being the goal. You can go ahead and listen to that. If it's something that you're like, no, Maddie, I do like my strong value in my brand is being affordable, but affordability cannot be at the cost of your overall profit of your business. If you are saying, yeah, I want to be as affordable as possible, so I only need to make $1 per item, and then you're complaining about profit margins and profitability in your business, it's because we are actually pricing our product at an unsustainable rate. We have to be able to make a certain amount of profit in order to make your business make sense. Profit is part of business, and you don't have to price gouge to the point that people are paying way, way, way too much. If you have a 3% cost or a 98% profit margin, that doesn't mean that that's what I'm going for. What we're going for is actual like sustainable pricing. We need pricing that actually does make sense. And what goes into that is pricing for your labor. A lot of people don't actually price their products with their labor included because it's just their time, but that your time eventually might be some employees' time and other people. You cannot outsource if you don't have labor in your cost. So whatever that might look like, we have to be able to account for your time, whether you're making it right now or you're packaging it or whatever that might be. We have to account for labor within the actual overall pricing of a product. So your price of your product makes a major difference in your profitability, but profitability is not all just a pricing issue. Another major issue that people might have that doesn't have anything to do with the price of your product is that you actually have too much inventory. You have too many SKUs that you aren't able to be profitable because you're sitting on a lot of inventory. You have a lot of SKUs that just have inventory on your site that aren't actually selling. So a product suite issue a lot of times can actually be a profitability issue at the end of the day because you're sitting on so much money of inventory that is never selling. And so if that is an issue that you have, that your products don't have a lot of buy through, that you aren't actually seeing that you don't have a lot of turnover of inventory, that you just have a lot of inventory sitting on your shelves, and that you feel like you're constantly launching new products because that's when you have sales come in. That's the only time that you can make sales, but you're not actually selling through all of your product. And maybe you are, and then you don't actually have product that you can sit. A lot of times this can actually be a sales or a marketing or a product suite issue. I actually have a client that's just like this. And to kind of tell you a quick story, I had a client that came in and she was working with me, and she was struggling with profitability. And we looked at all of her numbers, which is one of the first things that we have to do, is really understand your numbers, understand your sales, understand your cost, your expenses, all of that in order to fix profitability. And it ended up being a product suite issue. She had hundreds and hundreds of products on her website. And because she kept launching just a bunch of products every, 6 to 8 weeks, she would launch a new collection, but she would launch 30 to 50 items every collection, which meant she couldn't actually market her products. She wasn't actually selling all of her inventory. And she thought it was great that people could constantly go to her website and shop all of these different things, but she was sitting on thousands of dollars of inventory. She was sitting on so much expenses, and every time she launched, it was so expensive for her to launch that she was never actually cutting enough profit to be able to run her business sustainably. And something that we had to really change was we cut a lot of her products. We did a major buy off sale of like the bottom half of her overall of all of her SKUs, and we actually just minimized her product suite, allowed for people to buy a lot of that inventory. We ran a massive sale where she was still making money on it. We were still ensuring that she cut a profit on it, so she had a big amount of cash flow come in. Focus then shifted to her audience having fewer decisions that they needed to make on her products. And so sometimes more does not equal more on your website. So we cut the amount of products that she sold. We cut the amount of products that she had to launch all the time. And we actually allowed for her customers to make better decisions, easier decisions, and actually buy more at the end of the day. So you might have too much inventory. You might be launching too many products. Some businesses literally have one SKU. Some businesses have 6 SKUs. You don't need to have a million products to have a very profitable business. What we need at that point is marketing and sales in order to just be able to communicate that further. So far, we've talked about not understanding your profit margins and your cost of goods. We've talked about not accounting for your labor in your price. We've talked about pricing mistakes as trying to be too affordable. We've talked about having too much inventory, which a lot of times is an actual product suite issue. We can also add to this mix of having too high of labor costs. Labor is obviously necessary. Now, some of you may have a team, some of you may not have a team and you're just paying yourself. Some of you may not even be paying yourself at all. However, if we're looking at labor costs, they are necessary to scale. We need to be able to hire people. We need to be able to have a team. But where it's actually an issue when it comes to labor costs is if your labor costs are too high and you don't actually have the capacity to scale. One of the biggest red flags that I hear from my scaling clients is when they come in, they have a low profitability, their labor costs are really high, and I ask them, okay, this is all right. Can we just optimize and try to double your sales? Can we just optimize and try to drastically increase your sales? Do you have the capacity with the staff that you have right now in order to see a drastic increase in sales? And if the answer to that question is no, we have to look at actually what is the efficiency of the labor that we have. What are the things that our staff is doing that we can have manufactured, that we can outsource, that we can actually cut out of their tasks? Because if that is you right now, you have very high labor costs and you have low profitability and you don't have the capacity to sell more product, that is a recipe for disaster. Because at that point, if we increase your sales, then we have to hire more people in order to fulfill those sales. And then if you're hiring more people, your labor costs continue to go up. So what we have to do is we have to actually look at this. Do you have staff that are hand making products? Can we have them manufactured? Do you have staff that are putting like labels, stickers on products over and over and over again, on jars, on whatever that might be? Can we have that manufactured? Because if you look at that, you're saying, Maddie, custom packaging is so expensive. It's so expensive, but are you actually accounting for the hours a week that you are paying a staff member to put stickers on a jar where instead they could actually be fulfilling more orders? And so if you are paying somebody right now to put stickers on a jar, stickers on a box, stickers on whatever, this is a major piece that I see. If you're paying somebody right now to put stickers on things or, to manually do something that doesn't actually have to be a manual process because it's too expensive to have it outsourced or to have it manufactured and have it shipped to you that way, are you actually accounting for the lack of sales increase that you could have because we could have that person actually fulfilling orders or doing something else? That is something that is very important as well. There's also, not to get too into the weeds of it, there's also something called a 3PL, which basically means they are fulfilling your orders for you, which is something that you can look at because a lot of times it's actually cheaper to have a 3PL to fulfill all of your orders, and they do all of your shipping they basically are a warehouse that ships your products for you than having people in-house. Again, that's getting into the weeds. Not every business needs that. If you want that small business, that small team feel, it's not necessary, but if you're really looking to scale, it might be something that we need to look at. So we need to ensure that your labor costs aren't too high. We need to make sure that the labor that you have is actually efficient and there aren't better alternatives out there for you. Something that I hear a lot is like, well, this is how it has to be done. This is how we've been doing it, so this is how it has to be done. And your girl is as type A as it comes, okay? Like, I just want to say that. I have said this before. This is how it's like, to be totally transparent, I have said that phrase. This is just how it has to be done. This is how I do it. And it's because we are so in our business. As our business grows, we just kind of continue a lot of times the same systems and the same processes. But now that your business grows, there are different things that we might have to do, different ways that we operate, different things. Like I just said, some people really want to have their products in-house, whether that's being made in-house, whether that's being shipped in-house, whatever that might be. My question for that is why? Like, why does it have to be done this way if it's always been done that way? And if it is just like, well, I don't know, it's just what I want to do, then we have to kind of look at, okay, what are these other options? Does this actually fit your values that you are going for? We can't just everything when we have a problem. If it's a pattern that you're seeing in your business, we have a major problem. A lot of times, profitability problems take major action. They really need to make a major action. There's some things that make some small tweaks and adjustments. Sales increases, you can make some small tweaks and adjustments on your website and see a big change. If we're trying to see a 10% increase in your profitability, that's a major change in profitability. When we're talking about $500,000 in sales, a 10% change in profitability is a lot of sales. And so is a lot of money. And so we need to be able to understand what it really takes in order to get there. Another major issue that I see, or a major mistake when it comes to profitability, is not looking at the perceived value in other countries. Now, this is only for businesses that ship internationally, but something that I've seen is that as currencies change, as the exchange rates change, if you are in Canada and your Canadian dollar is higher. So let's say that you are selling something for $50 in Canadian dollars, and then you go into the US, and I don't know what the exact conversion rate, but let's say it's $35 in the United States. You might want to look at shifting that based on perceived value. So kind of a better example for this would be if you're selling something for like $30 in Canadian dollars, and then in USD, it's closer to 20. Now, perceived value is again a pricing thing that we can look at, but perceived value of an item makes a big difference. So like if you're telling me that I'm buying, I don't know, if I'm buying high-end supplements, that's just an example. If I'm going to buy like a luxury supplement and it's based in Canada, and in Canada, you're selling it for $35 because it makes the most sense, like pricing wise, perceived value wise, branding wise, to sell it for $35 in Canada. But then you go in to the US and I see that this is priced at $20. You might have some people be skeptical. Why is this so incredible? How is this so natural? How is this like all of these things? How is this so high quality, whether it's jewelry or clothing or whatever, yet they're selling it for $22? That seems a little low. Perceived value really does make a major difference. And so what I've done with some of my clients is actually just match perceived value in Canada dollars to US dollars, and it actually increases your overall profit for your US sales. Now, again, that's something like a lot of business is a value and a moral thing. That is something that to me makes a lot of sense from a perceived value perspective. Some of your clients might actually not trust your products and your statements of saying that this is like such a high quality product, and then the value of it, the actual cost of it is actually too low to what they would expect to be for that high quality item. So that means you can actually match your pricing from Canada to US dollars in some instances. I had a client that we did that, and she did see, of course, she saw an increase in profitability this last year because she did that. And she actually saw an increase in sales because that perceived value was there. Next thing, a major mistake is that you only look at your numbers once during tax season. It is really hard to keep track of your numbers if you're only looking at it once. And then you just had a whole year that is almost too far gone to be able to make any changes to it. I recommend looking at your numbers or having a meeting with your accountant at least quarterly so you can see, are there any expenses that don't make sense? Is there any expenses that you forgot that you're having? Are there any softwares that you have? Like every year, this time of year, I go through and I delete softwares. And that's because like, oh my gosh, all of a sudden a year went by and I'm no longer using this app. I'm no longer using this major AI software that I spend $500 a year on, whatever that might be. You can actually cut those expenses down. And if you keep an eye on your numbers more often, you can actually catch a lot of those inefficiencies much easier. And then the last but not least, the mistake that I hear a lot is that it costs me so much to actually produce my product and I have low profitability. This is something that I hear. I heard it this last week multiple times from some of my scaling clients is when they send me their stuff, we sit down and they say, okay, Maddie, I really want to scale my sales. My profitability is really low. You know, I made X amount of dollars, but my profitability is only 5%, whatever, like my overall profit. And we look at it and I say, okay, well, where does the majority of your money go? And their first response a lot of times is cost of goods. Like it costs me so much to make my product. And I say, okay, that's okay. It costs you so much to make your product. Let's look at it. And then I say, what's your overall profit margin? And a lot of times the profit margin based on cost of goods, so how much money you make every single purchase that you make is, 60 to 70% or maybe 80 to 90% or whatever that might be. They give me some really big number. And I'm like, oh, okay, so you priced your products properly with your cost of goods sold and your labor and like some of those major like expenses. Your profit margin is there. But your overall, if your profit margin per product is really high and your profitability in your business is really, really low, that tells me you don't have a pricing problem, you don't have a supply problem, you don't have too high of cost of goods sold, you have too high of expenses elsewhere. Maybe it's labor, maybe it's rent, maybe it is, softwares and other expenses. Maybe there is an expense somewhere that is too high to be able to actually afford it in your business. When I have this conversation with anybody and I talk about financials with every single one of my scaling clients, if you have consistent sales in your business, you already know how to market, you already know how to sell, you have proof of concept, you have a community, people are coming in, we need to look at your financials because it is the biggest benchmark of longevity in your business. We need to understand before we actually scale your sales, we need to know your business is actually fit to scale at the point that it's at right now with the expenses that you have and all of that. And it really is your biggest benchmark for profitability. And I have this conversation with everybody that comes into me and I say, this might be, and we actually have a financial advisor within our product sales expansion business that does this with me. We look at it and we really look at it. It's actually my father. And so he is fully on like my team and we look at it together. We are looking at it and we're analyzing it. And then we provide some support in that capacity to be able to tell you like, what are these different expenses? What are these different places that we actually have some gaps in your financials, in your profitability? This has to be a very raw and a very real conversation. It is the major conversation that I have with people that I have to tell them, you might not like me at the end of this conversation. I might have to tell you, this doesn't make sense. This major area in your business doesn't make sense. I might have to tell you, you're paying your people people a little too much. And we need to be able to look at this and say, this is a very non-emotional conversation. We have to look at our numbers as data. We have to look at our numbers as facts. So we have to take emotion out of this conversation sometimes and just get very curious. This is why I think it's really important to have a third-party person handle your numbers to some extent, or at least analyze your numbers to some extent. Why that is because I don't have emotion around your expenses. I look at your expenses and sometimes I don't even like looking at my own expenses because we have emotion around it. Money, a lot of times, carries emotion. And so it's good to have a third party person look at it it doesn't impact how much, it doesn't impact what, the conversations they have to have with their staff. It doesn't impact the actions that they get to make. And so this is a conversation that if you don't have the capacity to take emotion out of, I do think it's really helpful to have a third party person that understands numbers, understands business, understands financials and accounting, be able to look at your stuff and really provide you a report of this is what is not working and these are your gaps from a very non-emotional standpoint. Money is emotional. It has to be raw and real. We need money in order to survive. We need money in order to have a business. Money is kind of it is the transactional element of business. And so if we put all of this effort in and money isn't coming out at the end of the day, it's a major cause of burnout is actually cash flow issues. And in all of my research from burnout and how to actually prevent it, this is something that is not talked about enough, is that you need to have profitability in your business to be able to prevent burnout as well. It is a major piece. It's a major cause of stressor because if you don't have the cash flow to actually do things, to actually invest in things and reinvest in the business and answer to your expenses, you will actually burn out. You will cause yourself a lot more stress than what's necessary. So this is some raw and real conversations. And that's why I really want to come at it without that fear-mongering approach. It's if you don't know your costs, your business is going to fail and all of that piece. That's not the case. Your business isn't going to fail. It could. It is a major reason that startups do close their doors. However, we can fix it, and it doesn't have to be some major thing. We can look at it. We can look at your costs. We can look at your suppliers. We can look at your labor, and some of the changes that has to be made can just be, running a major sale and cutting some of your inventory. Some of the changes that can be made is changing the tasks that some of your staff does. Some of the changes that can be made are looking at your overall pricing and making some minor shifts. Yes, profitability does take big action, but there are small things that we can do to start making that change really, really quickly. First, you need to scour your numbers, know the key metrics that you're looking for, know the averages in your industry is really important, and be able to make those non-emotional decisions from the facts that you're looking at based on that spreadsheet. We need to be able to look at these as facts, this is what's going on, and we have to be able to make kind of some of those non-emotional decisions around it. I just want to give you a client story here and kind of just to give you kind of some perspective on some of the small things that it might take. She came in making around $500,000 in her product-based business in revenue. So overall sales around $500K. Her profit though was around $35,000. First things first is that I needed to look at her overall, literally at the kickoff call. My number one, you to send me all of your numbers. I want you to send me your sales data. I want you to send me your P&Ls. I want you to send me all of your numbers. Her labor was around 30%. Her cost of goods sold was around 25%. And her rent was around 12% of her overall cost. Those were her biggest expenses. So right there, 30 plus 25 is 55 plus 12 is 67%. So just with those three major expenses, her overall profit is already, 33. That's 33% is her overall profit margin. So with that context, they had no ability to grow their sales even if they wanted to. So with that context, I looked at kind of what they were doing and I said, okay, this is fine. Right now, with the labor being 30%, which is kind of high, your labor being 30%, which is slightly high for industry average, do we actually just have the capacity to optimize and increase your sales? Because if your profitability right now with your current staff, your current supplies, all of that. If your profitability is low, but it's because your sales have kind of plateaued, we can just optimize your sales and your marketing, and you can make more sales and you can actually make more money if we have the capacity with the current labor and the current expenses that you have to actually just make more sales. Or does making more sales actually mean that we are going to incur a lot more expenses? And when we looked at it, she really didn't have capacity to increase her sales at all. Major red flag for me, as I've already said. So we then looked and we audited her tasks, the tasks of her employees, and we found lots of inefficiencies in the things that they were doing. They really were just like, there was pieces, like I said before, that you can outsource, things that didn't really make sense. And so we looked at their numbers. We cut about 20% of her overall product suite that didn't make sense for her business, that wasn't really selling. It had really low profit margin. There wasn't really desire there, and there really wasn't ability to grow. She had like tried everything she could to sell those products. They didn't really work. And so we got rid of that inventory. That wasn't selling. And then we actually optimized the inefficiencies within her labor, within the labor that she had, within the team that she had. Managing team is a really big piece of profitability. She didn't need to hire new people anymore. Now we were able to actually increase your sales. So then we optimized her marketing, we optimized her sales. We basically created space within her team to increase her sales, in order to increase her sales, in order to actually just make more money, because a lot of her expenses were fixed. They were going to be there no matter what. And her profit increased to $80,000 from $35,000 the next year, and her revenue went up to $650,000. So if you look at the percentages there, her percentage of profit actually drastically increased, and she over doubled her profitability the next year, and her sales went up by only, I don't know a percentage off the top of my head of what that would be, but her sales went up, her revenue went up $150,000, and her profitability doubled. And so again, it doesn't need to be, sometimes it's a major overhaul of your business. Sometimes it's making small tweaks and adjustments to start to try to kind of dig ourselves out of this cash flow issue. It is possible to make a big difference in your profitability. It doesn't mean that you have to burn your business to the ground and start over, but we do need to take a strategic approach to it. You do have to take a really bird's eye approach, meaning you have to look at absolutely everything, kind of like a zoomed out approach at your finances, at your sales, at your profit per item. And we need to look at like multiple different things. Like I ask for my clients to send me their P&Ls, profit and loss statements. I ask my clients to send me their profit with like their sales numbers, which ones are the most sales, which one has the fewest sales. And I also ask them to send me their profit margin per item. Those are the three major pieces that I really want to know to be able to actually make some of these decisions. And then we have to be able to look at it, analyze it, and make decisions based on facts, not just emotion. And we have to be able to ask ourselves some big questions. So I know that was kind of a lot of information, but looking at profit margin and looking at overall profitability is one of the major mistakes that I see, or one of the major areas that people need to work on when it comes to scaling your business, because you've done the thing. You've built your sales. You figured out how to market. You figured out how to sell. You figured out how to build a community. You figured out how to get people to buy. That is incredible. I just want to say that's incredible. A lot of people can't do that. Less than 7% of female business owners ever hit six figures in their business. If you have gotten to that point, you are doing an incredible job. And even if you haven't gotten to that point yet, you're still doing an incredible job. If you have sales coming in, many people are struggling to get to that point. But now that you've done it, we need to optimize the behind the scenes to make your business actually scale, to make your business actually have space to grow, to make your business last if it's something that you want it to last. Some people even say, you know, Maddie, I'm building this business to sell, that they want to sell it eventually, to be like, have their business be acquired and get like a big payout. And your numbers have to make sense. Your profitability has to be there. Your business has to be marketable if that's something you're wanting to do. So looking at your business, looking at what your future plans are in order to make big action, in order to invest back into your business, in order to figure out how to actually have inventory and to outsource things, to figure out how to expand your team. It all comes back to profitability. We need money to do things. Money allows you to make bold action, and we are in the business of making money. And I don't think enough people are comfortable saying that. Like, in business, now for me, like, it's not my major factor in running a business and running the business that I run is to make money. My major mission is to, like, I would do what I do for free. However, we do still have to be profitable in order to allow my business to run and flourish moving forward. In order to actually help people, my business has to stay profitable, because that means that I can continue showing up and continue running this business. So some major action items here for you. I know I kind of just want to sum up what I want you to do, because I know that was a lot. Some of the major mistakes, I know that it's kind of it can be a profit margin issue. It can be a pricing issue. It can be an inventory issue. It can be a labor issue, like a team issue. There's a lot of different areas, and this is why we have to do a pretty bird's eye approach. We have to look at everything. So first things first is I recommend doing quarterly audits of, like, putting that on your calendar right now. Quarterly audits, when are you going to do it? And just put it on your calendar. That one day every 3 months, you're going to at least, and maybe it's for 1 hour, at least just poke around in QuickBooks, have a call with your accountant, or just look at your overall numbers. I want you to get curious on your inefficiencies. Try to take that emotion out of it and just ask yourself, is this something that I actually have to do, or is this something that I am just saying that we have to do? See which of these mistakes you might be making. Do you feel like it's a profit margin issue? Do you feel like it's a pricing issue? Do you feel like it's an inefficiencies issue? Like, what mistake do you feel like you might be making? And a lot of times the mistake is actually not what you initially think. So many people say, I have too high of costs. Sometimes it's not too high of costs. It might be too low of something else. And so we have to kind of look at this and try to identify which mistake you're making. I do think having an incredible accountant, if you don't already, is really important. If you have an accountant that's very hands-off and you need more support, that might be something to start shopping around. And if you don't understand the numbers and you are kind of feeling crippled by all of this profitability, you have to find somebody that does. And I've done my own accounting every single year in my business. I just want to make that very known. I don't have an accountant. I took accounting classes. My dad's a financial advisor. We have been able to do it ourselves. However, if I didn't have my dad to call, I literally called him this morning when I was sending 1099s to my contractors. And if I didn't have him to call, I would need an accountant. I would need somebody that can look at my numbers and really say, this doesn't make sense. So my dad and I sit down once a year, absolutely, and we scour through and we see what are inefficiencies, what doesn't make sense, where do I need to make better business decisions, well as I do my own accounting quarterly, so I know what money went in, what money came in, what money went out, because if we don't know and have a good idea of the financial health of our business, if we don't have financial literacy around our business, it actually is really hard to make solid business decisions. So if you don't have somebody like my lovely father that you can call and that is going to pull up your income statement, whether that's an accountant, whatever that might look like, you need to find that third-party person. Now, again, I do recommend having some sort of third-party person that doesn't have any emotion behind your numbers, looking at your numbers regularly just to say, this is the issue that you have. Like, we need to look here. We need to look here. We need to analyze this. And sometimes you can have 3 or 4 major problems and we can tackle 2 of them and at least make some major difference. And those other 2 we can eventually look at, or, those are things that you need to keep the way that they are for the business that you want to have. That's okay. There's many different changes that we can make. So this episode has a lot of different tips and tricks within it. If you are struggling with profitability and you don't know where to turn, I would love to scour your numbers. Like I said, I'm already a little bit of a nerd with it. Would love to scour your numbers and have kind of that full business financial audit. If you have a question on that, feel free to come on over to my Instagram. You can DM me numbers and I would love to chat with you there. If you have any questions, if this was a topic that you want me to dive into more, if you'd like more of these numbers and financial, these metrics, whatever, kind of more of this numbers admin side of the business podcast episodes, I love to hear that. It really helps me be able to create the calendar that makes the most sense for you on my podcast episodes. So feel free to reach out. I would love to help you with that. Feel free, come on over. My Instagram handle is @thisismadisonpage. But if you are interested in getting the support with your numbers, DM me numbers and we can definitely dive in to there. This is something that we do with all of our product sales expansion clients with the help of our team financial advisor, because it is really important to understand all of these different pieces. And having a specialist's approach to it is really, really helpful, so they can see the gaps really quickly. They can identify it. They know the mistakes. They know the patterns. If you have any questions for me, as always, feel free to reach out. My DMs are always open. Would love to hear that you loved this episode. I love you. I'm rooting for you. I'm in your corner always. And I will see you in the next episode.